Hello everyone, welcome to Trade Breakdown on EU. So I'm going to continue the theme of these breakdowns by explaining these trades and their thought process right from the daily chart, and then we're going to move on to the lower time frame and discuss how this trade was taken and what were the factors that led me to taking this trade and why did I have so much conviction in this trade that I managed to execute it properly. Also, as these new chapters are released every weekend, I'll start adding them to these breakdowns too, and will show you the live application of all of those concepts. That way you can replicate them in your own analysis and trading, and they'll assist you more than anything. The weekly chapters alone are good enough to help you understand the market dynamics, but what actually gets you to the next level and makes sure that you actually get everything out of these concepts is by watching these trade breakdowns and seeing how I've used these concepts in my analysis and how they've led me to taking trade ideas or generating trade ideas. So let's look at the charts and see what we've got here. So right here, first of all, you can see that with this expansion swing, we took out this range low and this range high. Now, if you watch the previous breakdowns, then you'd remember that our drawn liquidity is still higher, which is this range high right here. And we derived that from the weekly chart analysis, right? So the drawn liquidity is higher and we've taken out both range high and range low with this expansion swing, which means it's a bullish dealing range, right? So inside this bullish dealing range, we'll have both discount and premium region, and each will have their own respective key levels. Now, if you remember the previous chapters about dealing ranges, then you'd remember and you'd know what type of reaction each key level offers depending upon their position inside this dealing range. So premium key levels would only be able to offer retracement or small reactions, whereas the discount key levels inside this bullish dealing range would be able to offer reversals on the lower time frame or expansions on the higher time frame. So right here we're gonna see what are the different key levels we've got inside this dealing range and what sort of reaction they offered. So right here you can see that the first key level we've got inside this bullish dealing range is this order block right here, which lies in the premium region, right? And then we've got this FEG, which is inside the discount region. And along with that, we've got this order block, which is also in the discount region, along with this FEG. Now, if you look at this price action right here, then you would see that price first retraced to this order block right here inside the premium region. And because it was in the premium region, it only offered a retracement and a small reaction, right? And then it expanded lower. Now remember, just because it offered a small reaction or retracement, it doesn't mean that you cannot trade it or that I didn't trade it, right? If you remember the previous breakdowns, then you'd remember that I actually had a long or a bullish trade right here in this price action, and my target for that trade was this FEG right here or this Wednesday's candle high. And even though I took a trade here on the lower time frame and it brought profits to me, I was aware and conscious of the fact that I have to be vigilant and cautious when trading inside this price action, because I knew the price can expand on me lower again because it has to test a discount key level before it moves higher. Now there were multiple factors behind the trade that I took here, and the reason why I was so confident in that trade idea is because there were multiple factors like weekly profiles, intraday profiles, and time backing up that trade idea. That's why I took it, right? Then after price had this reaction right here and it found this new FEG, it reacted to it and expanded lower again to test a discount key level in the form of either this discount FEG or this discount order block before it starts moving higher again towards the higher time frame drawn liquidity, which is the range high above. Right here you can see that as soon as this week opened, what happened is that the Monday's candle had this down close candle, right? And what Monday also did is that it tested this daily key level right here straight away from the start of the week, and this key level was in the form of this FEG, right? And also with that, our opposing drawn liquidity or opposing key level that price can potentially be drawn to is this discount key level right here in the form of this FEG, right? So you can see based on this framework right here, we can work with this range and we can potentially look for shorts inside this range with our drawn liquidity being this discount FEG, because we know that if price is going to expand higher, first it will have to retrace to a discount key level, which is this FVG based on the bullish dealing range, right? So based on Monday's price action, we can expect a Monday high of the day because Monday tested a key level, right? And potentially for the rest of the week, we can expand lower towards the drawn liquidity. Now, what happened on Tuesday is that we had this candle right here, right? I didn't found any setups on Tuesday, so I stayed away. And then on Wednesday, what happened is that we had found this new FVG right here, this new key level that can price react off of potentially. So on Wednesday, I expected this FVG to be tested as a key level, right? And then I expected price to expand lower again towards the drawn liquidity, which is the FVG below us. Right here, based on this price action right here, you can see that not only you would have expected a Monday high of the weekly profile, but also a Wednesday midweek continuation profile too, because Monday first retraced back higher to test a key level and then it expanded lower to continue the weekly expansion lower towards the drawn liquidity. So that was my daily high time frame thought process on Wednesday, right? Expect this FEG to be tested, right? And then look for a short and trade it on the lower time frame and trade it towards the drawn liquidity lower. So you can see that the main two objectives on the higher time frame, which are determining my daily buys and intraday buys and determining my drawn liquidity, have now been accomplished. And based on our analysis, we determined that price is going to be drawn to this FEG right here. So the higher time frame thought process and analysis has now been done, and we've determined our drawn liquidity, which is lower. Now we're going to move on to the 4-hour time frame to find a CRT there and then position ourselves in that CRT towards the higher time frame drawn liquidity and then potentially trade it on the 15-minute time frame or the lower time frame based on time frame alignment. So let's go down to the 4-hour time frame and see what we've got there. So on the 4-hour, first of all, we're going to plot out our opening and closing times for the week so that we can see where we are inside the weekly range and what sort of weekly profile can we potentially expect. Now I've already explained all of this price action right here to you on the daily time frame, but let's revise it here again. So Monday immediately with the weekly opening tested a key level and expanded lower, and then Tuesday had this price action right here in the form of this ranging profile, and it didn't offer any favorable price action for me to trade, so I just stayed away. And then what happened on Wednesday is that we expanded above to the daily key level, which is the daily FVG, but not only that, we also expanded toward this 4-hour key level in the form of this FVG during the 5 a.m. candle. Now right here, I waited for this candle to close, and once it closed, I took this candle as a CRT and traded it on the lower time frame. Now right here, if you look at the closing of this candle right here, then you'd see that there is a whole dynamic in the closing of this candle in itself. If you look closely, then you'd see that this candle tested this FVG, but it never closed inside of it or above it, but instead it closed below this FVG, which suggests that the price action is showing bearish sign because it wasn't able to close inside of it. That's one of the reasons why I had so much conviction in this trade idea, right? The closure of this candle right here. This is also a factor that you can add to your analysis, right? You can look at the closure of the candle, and that can in itself tell you a lot about what price is telling you. Now if this candle had closed inside this FVG instead of closing lower, then I still would have taken it, but I would have been more cautious around here and I would have risked lower than I usually do because of this factor, right? So right here, once this candle closed, I took this candle as a CRT because first of all, it not only tested a 4-hour key level, but also a daily key level in the form of this FVG. The second factor is the closure of this candle, which is that the candle was unable to close inside the FVG, which showed bearish signs. The third factor is the timing of this candle, right? It's the 5 a.m. CRT, which are potentially good CRTs for reversal trades. And not only those factors, but also this CRT was purged at a key time, which is the 9:30 Eastern time, which is a good macro for CRT purges, right? The reason 9:30 is a key time is because 9:30 is the Nasdaq opening time, which is a key time for manipulation, expansion, or CRT purges. So all those factors led me to taking this candle as a CRT, right? I'll be making a separate chapter on CRT in later levels of CPI, discussing all of the factors and intricacies. but these were some of the factors that led me to taking this candle as a CRT. So you should note these factors and potentially look for these factors and your CRTs as well. And if your CRT doesn't follow and doesn't have these factors, then you shouldn't be trading it. So on the 4 hour again, my objective is accomplished, which is that I had to find a CRT, right? And then position myself and that CRT towards the higher time frame down liquidity, right? So now I'm going to go down to the 15-minute time frame and look for an entry there. So let's go down to 15-minute and see what we've got there. Right here, first of all, I'm going to put on the opening and closing times for the day, and then we're going to see what we've got. So right here, you can see that during the first half of the candle, we had a normal London protraction profile, due to which London had a manipulation profile and took all of this liquidity, and then we expanded higher, and with that expansion, we tested a higher time frame key level, and we know that our higher time frame drawn liquidity is lower, right? So based on these factors, we can expect a New York reversal profile, because we not only tested a higher time frame key level during the New York session, but also our drawn liquidity is lower. Our higher time frame drawn liquidity is lower, right? And also with that, we've got this CRT on the 4 hour as well, which we're gonna trade. So based on these factors, I expected a New York reversal intraday profile. Now right here, you can see that this CRT high was purged on during the 9:30 opening time, which means we had turtle soup during that time, right? Now there are different ways with which you can trade a CRT, right? We've got the model 1 entry, which is basically the order block entry. We've got the breaker entry, the case of death or the KOD entry, and we've got many other models too, right? There are many entry models with which you can trade a CRT, and your job as a trader would be to test all of those models, right? And gather data around those models, and then see which model suits you and your style the best, and then stick to that model and consistently trade it, right? Now in later levels of CPO, I'll be sharing all of these models with you, so don't worry about that, right? It's all predetermined and pre-planned. Now my favorite ones are, first of all, the model 1 entry and the turtle soup advanced entry, right? Now the model 1 entry has a confirmation factor to it, whereas the turtle soup entry doesn't require any confirmation, right? So for most of you, you should just stick to model 1 entry, because that one has the confirmational factor to it, right? But once you get more advanced, you can trade the CRT based on the turtle soup entries too. Now the turtle soup entry has got a lot of intricacies and details which will require a separate chapter on itself, but let me discuss it briefly here, and let me discuss how I took a turtle soup entry on this CRT. Now there's a proper logic behind choosing between model 1 entry and turtle soup entry, and we're going to discuss it later, but here I choose to trade this CRT based on the turtle soup entry, right? Now one way how you can trade it here is basically, as soon as this high gets purged, the CRT high gets purged, right? You take a market order entry there, and then you put a stop loss of 8 to 10 pips, right? Or you divide the range of this whole CRT and then determine your stop loss based off of that, and put your target either at the 50% of the CRT or the opposing end of the range of the CRT, right? Now this way of trading CRT is a bit risky and aggressive, because you have to be really cautious of the price action right here, and this type of entry should only be taken at specific key levels, and only when specific factors are backing up a trade idea or the CRT. As I said before, I've shown this to you just for educational purposes, guys, alright? And most of you, if not all of you, should just stick to the model 1 entry, because that one is more objective in terms of its stop loss placement, entry and targets. Now the reason I said put a stop loss of 8 to 10 pips here is because I've tested that myself, right? And for cases as such or scenarios as such, that stop loss placement works for me on the 15-minute time frame, right? This isn't the same for all time frames, remember. It depends upon your entry time frame too. For example, if you are, let's say, trading it on the 1 hour time frame, then your stop loss in terms of pips would be much higher and larger, because the momentum on that particular time frame is larger than the 15-minute time frame, right? In other cases, you can put the stop loss above another block's high or FVG is high on the 15-minute too, right? And this type of turtle soup entry. But as I said before, I've discussed it briefly here just to spark your curiosity and give you a sneak peek to what we're going to be dealing with in later levels of CPI, right? This was the trade breakdown. Now right here you can see that this is my execution of that turtle soup entry, right? My stop loss was around 8 pips, and then I target this CRT low right here, and that was my trade. I also took this trade right here on Thursday. If you want me to break down this trade as well and what were the factors that led me to taking this trade, then you can let me know, right?